The risk of loss in trading futures and options can be substantial. Therefore, only genuine risk funds should be used in such trading. Futures and options may not be a suitable investment for all individuals, and individuals should carefully consider their financial condition in deciding whether to trade. Option traders should be aware that the exercise of a long option will result in a futures position. Information herein has been obtained and prepared from sources believed to be reliable. Comments contained in these materials are not intended to be solicitation to buy or sell any of the commodities mentioned. Past performance is not indicative of any future performance. Opinions expressed here are the opinions of the author only, and not the opinion of any firm the author may be affiliated or associated with.
All right, welcome back to Commodity Classics. I'm Michael Yorba, your host. Thanks for joining us. My guest this segment is Jeanette Young, the option queen. Jeez. I hope we have the sound on. I'd love to hear that.
I didn't say anything.
Okay.
I was okay. It was totally okay.
It is. All right. You know, she just makes my day. I tell you, really, truly, I'm not joking. I mean, honestly. Now,
what?
The Dow.
What?
What? Let the Dow Daily. Let's get into that.
No, I didn't send you. I didn't send you one of those.
Yes, you did. You sent me. We have a Dow Transport Daily.
Ah, the Dow Transport. Interesting thing, isn't it?
Yes.
Okay, good. I got my breakouts. Here they are.
You know, I could see us at a Christmas party. This would be one.
Hello. I'm back.
Okay.
Here, this is it. I'm here. Gosh. All right. So we want to look at the transports. Now, remember how many times I've been harping on this, guys? I've been telling you to watch the transports. They tell you a lot of things about the market. They tell you when we're going to have a rally. They tell you when we're not going to have a rally. And these things have been very, very telling. Now, if you look at the transports, I now, again, will show you another horizontal line. And that horizontal line, I can't read it from here, but if we should break below that line, I don't want to own this thing.
Okay.
Okay. You see a buy signal on the bottom? That's a stochastic, but it is beginning to curl over. You have no reason to sell it yet, but it puts you on alert that we're kind of losing momentum on the upside. We're also towards the lower edge of the Bollinger Band, and today, I don't know what the transports did. I just took it down. I'll tell you what they did in the whole thing. Okay, so, where's the transports? They moved them. Okay, that's great. I'll find them.
Okay.
Don't worry. I'm always good at that. Oh, we were up 51.57 today. So it was a good day for the transports. But, you know, still, you got to take out that head over there. Now, what I'm looking at on that chart is a possibility if we go up and we make another attempt at the high and don't make that high. You see that? If we make another mountain over there on the right side of that chart and we don't take out the high, we'll be setting ourselves up for a head and shoulders top.
Got it.
All right? We don't know yet, but right now we're on alert saying, that's interesting. Let's see what happens. Crude oil tanks and goes down or goes south or drops in price. Then, of course, we'll have a new high in the transports. We still have a lot of truckers that are having a lot of problems. So I don't know where all the strength is coming from, really.
That was my question, because at some point we're going to get to a level where we're past the point of return, and when it comes to the damage that's done to some of these companies, because once you go upside down, it's very difficult to come back in an industry that sensitive like the trucking business.
Well, you know, this is transport, of course, is representing rails and airlines. Airlines, I don't see how they're surviving either, because they are doing everything they can to survive. I know the truckers, there was a huge article in the New York Times yesterday, I believe it was, about a man with a trucking company who's just selling his rigs because he just can't afford to do this anymore because of the cost of diesel. As you all know, diesel is more expensive than gasoline right now. If crude oil will back off, maybe that'll help them out a bit, because crude oil and diesel are fairly similar.
Okay. All right. Well, you know, that's a couple of floors down from you. Is there any hint about what the thoughts are on the floor from the NYMEX?
On the NYMEX, yesterday when the market retreated, I saw that it is possible to see crude oil at 124 and 25, which is what it hit today. Under that, you have 121. Under that, you have 118, 17, and then, of course, 114, and then 111.
Right.
Those are support levels. Support levels are places where things stop, and buyers seem to show up willy-nilly and take the other side of the trade.
Okay. So at this point, there's no clear-cut direction of what they're thinking. They're just kind of waiting for a big move.
Right.
Okay. All right. Let's look at the weekly on this Dow Transports chart, and then you give us a overall weekly. Looks like it's overbought, but and it looks like it's giving you another buy signal, or about to, on the stochastics.
Yep. That's what, well, you're overbought. You are curling over. Again, it supports the theory, and that horizontal line still works. And, yes, you're getting a buy signal on the Stokes, but you're overbought. Remember, you are overbought. You may go up, but you may not get that much room, which would support the idea of a head and shoulders.
Okay. I've got a question for you here on a fundamental basis. Do you think that transports are rising because of Warren, and it's Buffett, but he said Butter's investment?
I don't think that Warren Buffett's investment in the rails can entirely move the transport. I think that the transports are reflecting a high usage on raw commodities and the transportation of those commodities in the rails. I think the rails are the ones that are holding the transports up.
Okay. All right.
Which is very healthy for an economy. It shows that the economy is expanding. The truckers, of course, are troublesome. So, I mean, you've got, two-edged sword here. Kind of, we have to be realistic also. And of course, when you see strong transports, it usually bodes well for a good economy. And I don't see that so much. But it does, that's what it says, that's the theory.
So the feeling I'm getting from you is, yes, we might rally, but you're really not convinced there's any legs to it.
Well, okay, the rally on the stock market?
Well, the rally on the S&P and the...
Okay, the rally on the S&P is capped with the 200-day moving average and the 50-day moving average. You're in a trading range. Yeah. On one side, the investor looks, or the portfolio manager looks at the market and says, oh my God, I can only get 1% on my money or 2%. Where else can I go for more? And the answer is very clearly the stock market, preferreds, or bonds. And you might get more for that. So they're saying, oh my God, I can't sit in cash anymore because I'm losing money. When you look at inflation, you have a negative return. So that's what they're doing.
Really? Well, you ought to watch my last segment. You'll see something really cool when it addresses that very issue. So let me get into that and open that up a second. So what you're hearing is that people are grumbling about where they can get a decent yield on their investment dollar without having to accept so much risk because of the uncertainty of what could happen underneath the market. It could just drop at any moment.
It absolutely could, and I do think that somewhere along the line another shoe's going to drop somewhere, and we're going to test that 50-day moving average again. And if we break that, then we may start a little spill to the downside. I'm not entirely thrilled with what I'm seeing. I see a softness in the economy. I see that the stock market hasn't reflected the softness in the market. I see that it's up there and it's looking for higher returns. And, that's possible, but I just think they're way too optimistic right now. I think that there's a little, skepticism that you need to have.
Okay.
You need to be, if you want to be bullish and scared bullish.
Okay.
Always be scared.
All right, so these transports, the same thing as the S&P. Well, they're moving in more of a trending market.
The transports are making new highs. You see how they peak above the Bollinger Band. They are just on a roll,
right,
so to speak. I mean, you got to call it a roll. There it is. I mean, it's telling you that we're going to have higher prices. I don't see how, but, I'm missing something, obviously.
Okay.
I have a piece of missing information there.
No manipulation, though. It's just too big a market to do that?
Oh, no, I don't think so. I don't think so at all.
Okay, because there's a lot of people out there that are wondering if the market is actually over-manipulated. And
You mean commodities and the new regulations and the new belly aching from people who want to see that?
No, we had a guy named Jim Kelly on the show yesterday, and he was thinking that there's a lot of high-powered manipulation going on in the market. And he was pointing to the stock market and the government's, was it no crash team or something of that nature?
Plunge protection team.
Yes.
Oh, come on. That's an old story. We don't know whether they exist or don't exist. I'm not going to be so naive to say that they can't. But on the other hand, if they do, I don't know about them.
Okay. All right. I've got a question coming up here in the shout box for you in a second. I heard we soon to see an option on gold ETF. Do you know when and is?
No, I know.
Okay.
I don't. I do trade gold options here. That's this red thing that gives me permission to do that. I don't. And it would be very, very advantageous for investors to have an option like that because it would be able to give you greater ease for hedging and for adjusting your exposure to the market. Options do offer you hedges.
Okay, let me ask you a question that's aside from this, but it has to do with that badge there. If we had a move in gold that dropped down to say 600 or maybe 550, I know it's a long shot from here.
Yeah.
If we had a sudden huge move, would that change the price of the seats on the COMEX there?
Yes, it would. It would drop them.
To
probably. Who knows? I mean, they're not very high anyway.
No, really.
They're really not. If you want to look at the price of seats, you go to www.nymex.com and you go to the COMEX division of NYMEX and look at the seat prices. There's an active seat market. You can always check.
Okay. All right. Ballpark, what do they go for these days?
Option seats go for about $8,000. The regular seats, I think, go for about $50,000.
Okay.
Just COMEX.
Wow. Not a bad one. All right, let's get into the S&P before we run out of time. Let's bring up the, you sent us, was it a daily chart as well?
I sent you one with the 200-day and the 50-day, and I think that's the one you need to look at right now.
Okay, let's bring that one
Since I keep alluding to it. And the only thing I have on this chart, of course, I have the Stokes on the bottom, and it shows you we're oversold, and we got a buy signal from oversold. All right, this is classic. But you see the bottom line is the purple line. That's your 50-day moving average.
Right.
And you see the top line is your 200-day moving average. So you're beginning to see that one.
Right.
There it is. I mean, how much clearer can I make it?
Right.
And that's where she's going. She's going to bounce in between the two until we break decisively above or below.
Okay. Well, that'll give you some movements on
It'll
the
give you definite movement.
All right. Did you want to look at the last one, or did you want to mention anything in particular that was in your newsletter you want to bring out?
My feelings are for people who are having vacation plans this summer, they're probably in walking distance or biking distance from wherever they are. I had my first venture with a gas line this past weekend. I was totally floored because I chose the gas station because it was around the corner from my house. And there it was. I was sitting on line. And I could not believe it.
Really?
It was under $4 a gallon, but still, I'm sitting on line with a bunch of New Yorkers. Actually, I live in New Jersey where the taxes are a little lower, so it looked like everybody's running from New York to come over to sit on line and burn gas to get the bargain.
Wow.
Which it's always quite strange that people would sit on line using up gas to save a few pennies when they probably wasted more money with the $6 toll and everything and, sitting on line. But then what do I know?
Yeah. That's a classic. I'm surprised you're not still in the Hamptons or something for the...
I don't go to the Hamptons.
Oh.
That's even a worse drive because you know what? That traffic is even worse, and you have to sit on the road for 3 hours and back-to-back, nose-to-nose traffic. No, thank you.
Okay.
I'm still a vampire anyway. You see, I'm very fair-skinned, and I burn like crazy, so I only come out at night.
All right, Jeanette, we're going to end on that note. Thanks so much.
Nice seeing you.
Okay, you
Bye.
too. Bye. All right, that was Jeanette Schwartz-Young, the option queen here on Commodity Classics from the floor of the ICE Exchange. All right, we'll be right back. Our next guest is Ty Andros. He's the CEO of TraderView, LLC. He always writes a sizzling piece. I'll be right back after these messages. I'm Michael Yorba, your host here on Commodity Classics.